Hi everybody, welcome to Jin's Wall Street News. Applied Materials reported its earnings on last Thursday after the bell, and it expects current quarter's revenue to rise above 7% from a year ago. The U.S. Census Bureau announced last Friday that advanced estimates of U.S. retail and food services sales fell 0.9% from $730.3 billion in December to $723.9 billion in January. According to the Federal Reserve, industrial production increased 0.5% in January from the previous month. 10-year Treasury yield falls to 4.51% as the U.S. retail sales decreased more than expected in January. For the U.S. stocks, S&P 500 edged down 0.01%, while the Nasdaq Composite added 0.41% last Friday. Shares of Applied Materials dropped 8.18% last Friday after its earnings release. The company reported $7.17 billion of revenue for the previous quarter, up 7% from a year ago, above expectations. Adjusted EPS was $2.38, up 12% year-over-year, higher than market expectations. When it comes to the guidance for current quarter's revenue, the company expects it to be $7.1 billion, plus minus $4 million, up 7% from the previous year, slightly below expectations. Applied Materials Chief Financial Officer Bryce Hill said during the conference call, quote, "As a result of the expanded export controls announced in December and January, we expect to face a headwind to revenue of approximately $400 million in fiscal 2025. Based on these trade restrictions and our view of our business, for Q2, we expect that China as a percentage of total revenue will be about 5 percentage points lower than in Q1. Taking all of these factors into account, for fiscal Q2, we expect total revenue of $7.1 billion, plus minus $4 million, which represents a 7% increase year over year. The U.S. Census Bureau announced last Friday that advanced estimates of U.S. retail and food services sales fell 0.9% from $730.3 billion in December to $723.9 billion in January, up 4.2% from $694.7 billion in January 2024. Sales at sporting goods, musical instrument, bookstores tumbled 4.6% in December from a month ago. Sales at motor vehicles and part dealers dropped 2.8%, and even online store sales fell 1.9% in December from the previous month. According to the Federal Reserve, industrial production increased 0.5% in January after rising 1% in December, which was revised up from 0.9%, up 2% over the last 12 months. In major market groups, the output for business equipment rose 2.1%, the Federal Reserve said, quote, reflecting a strong increase in the production of civilian aircraft. However, manufacturing output fell 0.1% in January, the Federal Reserve said, quote, held down by a 5.2% decrease in the index for motor vehicles and parts. Meanwhile, the output of utilities jumped 7.2%. The Federal Reserve added, quote, cooled temperatures boosted the demand for heating, unquote. 10-year Treasury yield jumped above 4.6% as investors were shocked by the harder-than-expected CPI report last Wednesday. Then it fell after the PPI report was released last Thursday, as economists expect the core PCE price to rise 0.28% in January, based on the CPI and PPI data. 10-year Treasury yield moved down further last Friday as the U.S. retail sales decreased 0.9% in January, far below expectations. U.S. stocks mixed on Friday. S&P 500 edged down 0.01%, and the Dow Jones Industrial Average lost 0.37%. The tech-heavy Nasdaq added 0.41%. Okay, this is the end of today's news. Thank you for watching. Have a great day.